The topic of the day is charitable giving in a new tax environment. Over the last 2 years, we've heard a lot about tax reform, different proposals of ways we could change our corporate and individual tax code to make it simpler and to also do a tax cut for individuals and companies. And after all the various iterations, we now know what the new law is going to be. It began January 1, 2018, and a lot of people have been asking us at the Community Foundation, what impact is the new law going to have on charitable giving? There's been a lot of different speculations out there about will it hurt or help, and we wanted to provide some thoughts from the Community Foundation's perspective about how this new tax environment could impact charitable giving. So let's start right from the top, big picture. We believe at a high level that this could increase the amount of charitable dollars going to nonprofits in our community. And here's the reason we believe that. The primary motivation for the tax bill was decreasing the amount of money in the federal government and increasing the amount of money in private citizens' hands, companies and individuals. About $1.5 trillion over the next 10 years would have gone into the federal coffers that is now going to be in local citizens' hands. And at the end of the day, we think a portion of those dollars will go to charitable giving because people, when they have more discretionary income or more resources, that tends to be when they give. So high level, we think additional dollars in private people's hands should lead to increased giving for our nonprofits. Let's dive into that more specific. So that's the high level. Let's get into it a little more specifically. First, we got to start with why do people give? This is a question of giving. And so we pulled out what social science has said are the 14 primary reasons that people give. These are tested with statistics and all kinds of other things. And you'll see there on the screen that there's a whole bunch of reasons, the 14 that are listed, and one of the 14 is a tax deduction, but the others have to do with emotions and wanting to give back, or religious reasons, or having experienced some hardship where a nonprofit helped you or a family member out, or wanting the world to be a better place. All these motivations that as to why people choose to give, and certainly in our country a hallmark has been the charitable deduction. That is an incentive, but it's only one of many reasons that people give. And you'll notice in the bottom right hand corner of that slide there that having income, discretionary income to give with, is also a key factor as to why and when people choose to support nonprofit organizations. So what changes did the tax law make that could impact charitable giving? One, and the one being discussed primarily, is the doubling of the standard deduction. And this is actually not a change to the deductibility of gifts to nonprofits. The charitable deduction was not capped or eliminated. In fact, it was one of the only itemized deductions that was not capped or eliminated in some way, shape, fashion, or form, which I think speaks very well to this country's valuing of charitable giving. So that was not changed, but the number of people that will be itemizing their deductions will likely change because they doubled the standard deduction. So for individuals, it's up to $12,000, and couples, it's at $24,000, and so less people will be itemizing, and that means that those people that no longer itemize will have less of a tax reason to give to charity. They have to be driven by the other means. A couple other changes that did happen in the tax law that could impact charitable giving. One is the elimination of the Pease Amendment, which was a 3% haircut on the value of deductibility for charitable gifts from high income tax filers. The elimination of that would actually be upward pressure on charitable giving, encouraging more high net worth donors to give because they can receive the full deduction for their gift. A third one there is the change to how much of your adjusted gross income you're allowed to deduct. It used to be a cap of 50% for gifts to public charities. Now you can give up to 60% of your adjusted gross income on an annual basis to nonprofit organizations. Again, an upward pressure on charitable giving. I already mentioned the charitable deduction not being capped or eliminated, so it functions the same as it was before, which is a really good thing. And the fifth potential that could impact charitable giving is the estate tax threshold being increased. It actually doubled. And for many, that threshold drives some triggers in their estate planning as to when dollars start to go to nonprofit organizations as compared to other heirs. You'll also note there that we are not trying to be tax experts, tax law experts. We are trying to do our best to analyze the law as we understand it and provide thoughts and guidance to people. So please talk to your attorneys and financial advisors and CPAs about anything before you listen just to us. Okay, so how do those changes to the law impact the reasons people give? And you see where we're going here. 13 of the 14 reasons that people give are not impacted at all. The religious reason, motivation, moral reason for giving did not change. The community having needs that we want to respond to did not change. You having been impacted by something where you want to give back and make a difference did not change. So by and large, we're here to say that charitable giving really shouldn't change very much because people have the same motivations and reasons to want to give. Now, for that specific reason about needing a tax deduction, let's talk about that. For those that didn't itemize in the past and still won't itemize, which is 70% of U.S. tax filers, nothing will change. For those who used to itemize and continue to itemize under the new format, also, nothing will change for deductibility of their gifts. So for 3/4 of U.S. tax filers, there's really nothing different on the tax deduction side. But for 1/4 of Americans who used to itemize and don't any longer, there is that question: what is the financial impact of giving for me, and can I afford to keep giving when I don't receive the tax deduction specifically anymore? So let's look at those folks. We're going to spend most of our time talking about that 25% of American filers, and we're going to run some numbers for you to show what is the impact of continuing to give in this new tax environment for those that won't itemize anymore. So there's a couple examples here that we'll walk through and show. The first is for an individual making $64,000 a year, which is the average median income here in Ottawa County, and we are showing what their taxes looked like in 2017 as compared to 2018. And what we held constant in the 2 years is the income of the individual at $64,000, the amount they're giving to charitable organizations, which we picked 3%, since that's the average countrywide of how much people donate to charity. We also kept constant the amount they're taking in the mortgage interest deduction, and we kept constant how much they're able to deduct in state and local taxes, property taxes, the main other categories for itemizers. And you'll see there on the right table that they itemized in 2017. Their deductions came to higher than the standard deduction of $6,350. So they were able to itemize and take the deduction for those gifts, for those ways of spending money. In 2018, they did not get above the standard deduction limit of $12,700, meaning it is smarter for them not to itemize their charitable gifts, mortgage interest, and state property and local taxes. What the table on the left shows is what their take-home pay, if you will, take-home income is minus some of these differences. So in 2017, $64,000 adjusted gross income minus their deductions of $8,960 because they itemized, minus the personal exemption of $4,050, meant their taxable income was just under $51,000. Under the tax rates in that year, they paid $8,486 in taxes, and you'll see that their take-home income, the amount of money they have to spend on housing and transportation and all those other things, is $46,554. In 2018, they take the standard deduction of $12,700. There's no longer a personal exemption because that went away. So their taxable income actually went up, so $51,300. But because the tax rates are lower, they actually pay less in taxes, $7,226, the whole point of the bill. So the take-home income is $47,815. So when you factor in the fact that they continued to give at the same level of charitable gift, same level, no decrease, no increase, they gave it the same amount in 2018 as 2017, and they still had $1,261 more dollars in their bank account than they did in 2017. So for those that have said, can I afford to give in this new environment because I don't get a tax deduction anymore? The reality is you can absolutely continue to give what you gave before, and you may even be able to give more. As we show there, you could give that whole $1,261 to charity and increase your charitable impact very significantly, or even give a part of it, half of it, to additional charitable giving. So not only are you keeping it the same, you have the potential to increase your charitable giving in the new tax environment. So the other example is for an individual making $90,000 a year, and it just shows the same kind of things. This is somebody who, with their itemized deductions, on the table on the far right, you see that they gave $2,700 to charity, and with their mortgage interest and the state property and local taxes, they were at $12,600, well above the standard deduction in 2017. You see that they end up with a take-home income of $63,000 on the left table. And now you look at 2018, they just missed out on itemizing their deductions. They're $100 below the standard deduction. This is kind of the worst case scenario, if you will, for someone who just missed itemizing. But look at what happens to their take-home income in 2018 on the table on the left. They still have more money by $1,131 in 2018 in their bank than they did in 2017, even continuing to give at the same rate. These two scenarios are trying to illustrate, and this isn't going to be everyone. Not everyone plays out exactly this way, and there are more factors into what you pay in taxes than this. This is just trying to model the impact of the doubling of the standard deduction on people's ability to give. That's particularly what we're trying to analyze here, because some have said that the doubling of the standard deduction takes away the financial reason or could impact the financial ability for people to give. And this would show that it certainly doesn't impact their financial ability to give because it's being done in concert with the overall tax cut. Whether someone chooses to continue to give to charity is up to them, but we believe that they will have plenty of money to continue to do their charitable giving and plenty of reason to continue to do so if they care about improving the community and supporting individuals just like they did in the past. One more scenario is for a married filing jointly. And you'll see this is $150,000. This is a couple that's maybe a little bit towards the end of their careers where they've paid off their house. And so we ran the itemized deductions at the current giving rate here in Ottawa County of 6.8%. So much higher in the charitable giving, nothing on the mortgage interest side, some state property, local taxes. And you'll see that they itemized in 2017. And end up with a take-home income of $109,773, and even giving that big chunk to charity, still giving $10,200 to charity in 2018, not being able to itemize because they're not above the standard deduction, they still have almost $3,000 more in their bank account in 2018 because of the tax cuts, even using this standard deduction instead of itemizing. So another example of why we think that there will be dollars to give. Let me circle back to the big picture here. These were numbers and individual scenarios, but we are trying to encourage our professional advisor partners, attorneys, CPAs, financial advisors, anyone who works with clients to say, if you're reading the news and you wonder about whether you should still be giving, if there's still an incentive to give, the charitable deduction did not change. We still value that as a country, and the reasons you give primarily have not gone away. And you will have plenty of dollars, discretionary income, in the new tax environment to continue to do your giving at your current levels, if not even more, going forward. In fact, we would expect and hope that there would be more charitable giving with the additional dollars in people's hands. Of course, this all depends on what choices individual people make. People can choose to stop giving to charity for all kinds of reasons. So there's no guarantee that charitable giving is going to go up or down or stay the same in the years to come. But we just believe that there are plenty of dollars out there and motivation to continue to do that giving. A couple other things to mention. One is then what strategies are best for donors who will no longer itemize in this new tax environment. So a couple to point out. One is that the gifting of appreciated assets, the ability to avoid capital gains tax while making a gift of stock or land, real property to a nonprofit organization is still very relevant, even for someone who doesn't itemize. Avoiding that capital gains tax is a tax advantage for them in gifting those types of appreciated assets, so don't forget about that. Second is a strategy that is gaining popularity, and I think will be quite popular when people hear more about it in the new year, is the idea of using a donor advised fund to double up on your giving every other year. So the idea is, if you don't give enough to itemize in the new tax scenario, but you did itemize in the old tax scenario, it's possible that doing 2 years worth of giving in 2018 will allow you to itemize and take the full deductibility of your giving. And then you don't give any in 2019, then you give twice as much again in 2020, and then not in 2021, and you basically do every other year giving. You can do that through a donor advised fund, either at the Community Foundation or through other products out there. And that will still allow you to have those dollars go out to your recommended charities in a consistent annual basis. But it allows you to take the tax deduction in the year that you make the gift into your donor advised fund. So you see a scenario on the screen there which shows the ability to double up on that giving in year one, have 0 charitable itemized gifts in year 2, but because the standard deduction is so high, your taxes don't necessarily fluctuate that much, but it allows you kind of get the best of both worlds. We're happy to talk to people about that possibilities. We think that'll be a very popular thing for people to do. Third thing to mention is the IRA qualified charitable distributions. Nothing was changed related to IRA charitable giving in the tax law. What will likely change is the number of people who choose to take advantage of this opportunity because they may no longer be itemizing. The advantages are still the same, just like they were before. But the people who get the most advantage from gifting directly out of their IRA are people who didn't itemize their charitable gifts before and or who won't be itemizing in the future. And so for that 25% of people that will no longer be itemizing, if they are 70.5 or above, then the idea of gifting directly out of their IRA to charity is a really valuable tax smart thing to do, as you see from the scenario on the screen there. So we see that going up even more popular than it was in the past. So something to think about. Final message for us is the idea about corporate giving. So corporations will be paying significantly less in taxes, most of them, under the new tax law. And so our hope is that they will use some of those additional discretionary dollars to increase their charitable giving to their nonprofit partners, which if we see that come to bear will be a good thing for the nonprofit community. So finally, our recommendation for professional advisors, when you're talking to your clients, they may have read things on the news about the changes to charitable giving. Should I continue to give? Our hope is that you will be able to remind them as to why they give in the first place. Most of the motivation comes from things other than taxes. But when the question turns to taxes, we hope that you will encourage folks that they will have plenty of money, just as much, if not more, discretionary income to give to nonprofits in 2018 as they did in 2017. We think if we lead with a positive message that people will understand and continue to give, and their bank accounts will feel just the same, if not better, while they continue to do so, and that'll be a good thing all the way around. If you have any questions about this or want to talk further, please don't hesitate to reach out to myself, Mike Goorhouse, at the Community Foundation, or anyone on the foundation staff. We'd love to help you think through how this could impact your clients or strategies for how to maximize the new tax scenario from a charitable giving standpoint. But overall, we're just glad that the deduction stayed the same and that there's good positive momentum around charitable giving.